Hello, traders, and welcome to Simpler Trading. I believe the best community of traders, hands down, that I have ever discovered. If you're new to Simpler Trading or maybe not a member, I highly encourage you to join us in one of the rooms. You will not find a better community of moderators and traders around. My name's Melissa. I'm a trader here. I trade supply and demand in the trendy trading room at Simpler. And today I want to talk about how I use imbalance candles in my trading. Now, you may ask, what do I mean by imbalance candles? Well, what I mean by an imbalance candle, these are candles on your chart that are much larger than the average candle size and where supply and demand go out of whack, creating massive opportunities. I'm going to show you how to spot them and trade them like a pro. So let's dive in. First, I need to mention that adding this concept to your current trading strategy works great whether you're a leap trader, a swing trader, or a day trader. Whether you're trading futures or options or equity, it doesn't matter. The concept is fractal, meaning it is valid across all time frame charts and types of tickers that you may be trading. So I want to start by looking at this 2-hour chart of IWM. This is a recent chart. You can see that the yellow arrows here are pointing to imbalance candle. These candles that are of unusual size. The two green candles here represent imbalance candles to the upside, where price moved very rapidly to the upside, leaving behind orders that need to be filled. The red imbalance candle here, it represents a sharp move to the downside, creating an imbalance up here where there are sell orders waiting to be filled. Now, because price moved so sharply, they create great opportunities to either buy the dip or sell the rip. I'll show you on the next chart how I create zones based on these imbalance candles. When I combined an imbalance candle with my favorite candlestick pattern, which is the inside candle, I can find high probability buy zones and sell zones, also known as supply and demand zones. So you can see here again, the imbalance candle is right here at this yellow arrow. When I look down and to the left, looking for an inside candle followed by a candle that moves up, this has created a demand zone here. In this zone is where I am expecting buy orders to be waiting to be filled. So on a pullback to this zone, I would look to buy the dip. Same thing up here at this imbalance candle. I look down, I look to the left. I'm looking for these inside candles followed by an up move, creating a demand zone at this imbalance candle where I again would be looking to buy the dip because I believe there are orders waiting to be filled by institutions mainly. And so it presents a great buying opportunity. On the other side of this, a sell the rip opportunity occurs up here. again, you can see the big red down candle, imbalance candle, looking up and to the left, finding those inside candles followed by a down move gives me a supply zone up here that I would be interested in selling the rip at this zone. Pretty cool, right? Now, you might ask, but why does imbalances matter? Imbalances reveal market inefficiencies. What I mean by inefficiencies is that the market moved so fast at those levels that it left behind unfilled orders. They help confirm trends and spot the big player moves. You don't have to have volume on your charts to tell when a high level of volume came in. You can simply look at the size of the candle and recognize that a imbalance candle represents a large amount of volume coming in very quickly. They identify strong support and resistance zones and provide high probability trade setup opportunities. That, my friends, is why you should care about imbalance patterns. They, again, reveal market inefficiencies or unfilled orders that price loves to revisit. These big moves turn into support and resistance zones, giving you high probability trade setups. So, whether you're entering a trade or looking for a place to enter a trade, or you're looking for a target, or just looking to spot big player moves, imbalances are your edge. Check out how price bounced perfectly from this recent imbalance zone on AMD. Here you can see that we have an imbalance candle. Looking to the left, I can see that we had inside candles followed by the big up move. This created a buy the dip zone or a demand zone here at 146.12 by 144.82. On the pullback, right here, this yellow circle, this was the pullback to this market inefficiency or unfilled orders that were left here after a sharp move to the upside as price dipped into here and those orders were filled. Boom, up AMD went, creating new all-time highs. So just by catching this move here, this is a 2-hour candle. Catching this move, buying at or around 146 would have in 4 hours profited $12. That is a $12 move from this imbalance zone or buy zone. All right. So that is pretty powerful. Now, there are patterns that we need to be aware of with imbalance candles. So when you're identifying the imbalance candles, you need to know exactly how do I personally trade these setups. So when price retraces to an imbalance zone, I want to buy at demand or sell at supply with a stop loss beyond the zone. So on the other side of the zone, on the back end of the zone, is where I place my stop loss. That means I have defined risk before entering any trade. And my take profit would simply be the imbalance zone to the opposite side, where if I'm buying in a demand zone, then I want to take my profits at that supply zone where I have the imbalance candle and the inside and down candle formations. It sounds simple, right? It truly is, because these imbalances are magnets where unfilled orders, typically from institutions, are waiting to be filled. So price tends to travel between them consistently. Now, of course, within as is with any strategy, there are risks and we want to protect our capital. So it's important to talk about risk management. And of course, some mistakes that I made as I was just beginning to trade this strategy. And I want to touch on those with all of you. So, number one, manage your risk. Always trade with a set allocation per trade that you are comfortable with and that your account size can handle. I always use a stop loss. And this is very important, I avoid trading a zone that has been tested multiple times. We need to watch out for common mistakes, like don't ignore the overall trend. If you're trading from a daily chart and you're trading an imbalance zone and the trend is bullish, then my preference or my bias is looking for the dip buy zone. Okay. If the trend is bearish on the daily time frame chart, then my bias or my preference would be to sell the rip at the supply zone. So, keeping trend in mind is very important. And I got to say it again, do not over leverage. It doesn't matter if it's this strategy or any other strategy that you're trading. When you put more capital at risk than what you are comfortable with, you are setting yourself up not just for potential failure on your P&L graph, but also mental capital, right? That your trading mindset. So please, please, please work on not over leveraging, whether it's trading imbalance zones or whatever other strategy you might trade. We need to keep our account protected. So, all of that to say, I got about 15 minutes left of this session, and there's nothing I enjoy more than looking at live charts and taking requests from you, the viewers, on some names that you might be interested in seeing how I would set up a trade plan based on imbalance candles and zones, buy and sell zones. Uh, First, before I take your requests, you can put them in the comments, the name that you would like to check out, as well as the amount of time you would tend to be in the trade. So if it's a swing trade that you're wanting to be in for a week or maybe a month or 6 months, I need to know that information. Or if you would like to look at a day trade setup in your favorite ticker and you want me to find the imbalance zones, you just put in there for a day trade and we'll take a look at some charts together. But before I do that, I want to show you without my drawings and my plan here an example of an imbalance zone for the NASDAQ futures today because it has proven to be very much an effective strategy to trade today. So, just so that I have a clean chart, I'm going to remove the drawings off, all of my indicators off of this chart so that we're just looking at candlesticks because I think it's easier to see the concept if we're just looking at candlesticks. All right. So let me do that real quick. I'm going to remove all studies here from this chart of the NQ. I'm going to maximize this cell so that we can look at these imbalance candles together. And I want to focus on today's price action that we could have day traded off of. So here is the opening candle on NQ. Let me take that white line off. You can see the very first 5-minute candle on NQ created an imbalance candle. Do you see it here? This candle right here is much larger than these little candles before it. Looking for the inside and down candle formation, I can create a zone right here. This would be the sell the rip zone on NQ today. The first sell the rip zone on the NASDAQ this morning. Okay. Now, as the day went on, we created some more imbalance here and definitely some more imbalance here. So I could really increase the size of this zone all the way down to 23,043.50. That would make my total risk on this imbalance zone about 46 points. Let's just call it 50 points here. All right. So, with that, I also want to find the imbalance to the upside as well. And then we will talk about the trade plan and how this zone worked this morning. Right, this candle right here is of larger size than the average candles around it. So this represents the imbalance candle here. Now I would need to go back to probably Monday. So I'm going to switch this to a 2-hour chart real quick, just making it easier to find that buy zone looking at a little bit higher time frame. Okay, my imbalance candle was here. Here would have been the buy zone, which actually this zone was on my chart before I erased it off. And the trendy room was able to take advantage of this buy zone this morning. So great job to the traders in the trendy room that was able to catch that buy the dip opportunity. Now I'm going to go back to that 5-minute chart and we're going to look at and talk about how I would plan trades based on these two buy and sell zones. So this is my sell zone. This is where I'm looking to sell the rip. This is my buy zone where I'm looking to buy the dip. These are based on imbalance candles that were created this morning. So as price traveled up to this sell zone, we retrace to the sell the rip zone and we would have went short here at 23,043.50. And like I mentioned earlier, my target is the opposite zone. So the opposite zone was down here at 22,898, which would have been a cool about 150 points to the downside. Nice profits just by selling the rip at this imbalance zone. Then, right, this is the buy the dip zone. We can play it all the way back up to the sell zone where we would take profits. And I know traders in the trendy room did this side as well. But you can see in this example how price is moving between these two zones that I have taught you how to identify. Now, let me take a look at some requests here in the chat. Hannah would like to look at SPY and TSLL for a week. So let's look at SPY first. And for a week, my preferred chart to trade off of and trade buy and sell zones from is a 4-hour chart. If I'm looking to be in a trade for a week, I like to use the 4-hour zones. So we're going to look at this current trading range here. First thing that we want to do is identify those imbalance candles. Here is a candle of larger than average size, right? Here's the current price. I need to look down and to the left looking for this imbalance candle. Then I look over to the left to find my inside and up candle formation, which is going to give me my buy zone from this imbalance candle. Okay. Now, I do need to point out, remember, and the mistakes that potential mistakes that can be made is trading a zone that has been tested multiple times. So if I look, sorry, got to extend that out. If I look at this as a buy zone, it was created on this imbalance candle here. This wick represents buyers stepping in back in at this zone. So it's technically been tested, but it's been tested only one time. If I'm looking for my opposite side of an imbalance candle, that would be this candle here, which would represent the sell zone or my target back to the upside. Okay. Now, I am a very patient trader and I can wait for my zones to be hit. And I hope that you develop patience as well. If this feels too far away to you, then what I would suggest is shortening the time frame that you're looking at and look for imbalance candles on maybe a smaller time frame, but don't get FOMO'd into thinking that you're going to miss out. Go to a smaller time frame. This is a great example here. You notice we have this gap. The way that I like to look at gaps when looking for imbalance candles is to imagine this wasn't a gap. And either this candle here before the gap or this candle here at the gap is one solid candle. This would be an imbalance candle. Can everyone agree to that? If that was one solid candle and that gap was not there, this would be a large imbalance candle. So on the 2-hour chart, I could create my buy the dip zone right here using this gap up. Now, again, this zone would have been tested a couple of times, and you can see that when it was tested and these price moved back to it to pick up these unfilled orders, um, price definitely moved to the upside. Although it's pretty choppy, price still moved to the upside. So if on that 4-hour chart, that zone at 595, 596 seems too far away, what I do is step it down and look for a closer zone, still using the imbalance concept and, of course, the inside and up candle formation. So those are the two zones on SPY. Now, TSLL, we can do the same thing. So we will first look at the 4-hour chart, and then I will move on. If that zone seems too far away, then we can look at a 2-hour chart. Now, unlike SPY, TSLL is actually on this 4-hour chart in a downtrend, right? So I'm looking for imbalance, imbalance. This is the imbalance zone or the sell zone for TSLL on a 4-hour chart. Y'all see that? That is our imbalance zone or our sell zone to the upside on the 4-hour chart. Because TSLL is in a downtrend, this is a valid sell the rip zone right here. Another area that I want to point out where price is at on TSLL and why it has had such a hard time getting up and over $12 is this zone right here. Again, you got a gap. I just treat this as one big old long candle. Well, guess what? That gives me a sell the rip zone right here. And that's why TSLL all week has come up to this 11.50 to $12 range, and it's pulled back and pulled back. Once these unfilled sell orders are finally filled, that's when I believe TSLL can continue on its way to this 1387 by 1515 target. Okay. Next, we need to find the unbalance. Oops, sorry. The unbalance candles that are down and to the left. Looking here, this is a pretty nice size candle right here, but price is currently right at it, so I'm not going to use that one. I will use this one here that occurred on last Thursday. Though, if I look down and I look to the left, this is my buy the rip, or yeah, buy the dip, sorry, my buy the dip zone down here, where actually in the trendy room, we are long from uh, this zone, maybe a little bit lower. And still in contracts on TSLL that have break even stops. But these would be my two zones on TSLL. And just know that this 1207 until these unfilled sell orders get sold, guess what? You got resistance right here. All right, Stephen, I did the NQ. Donald would like to look at ES. I have only a couple of minutes, so I will do this one quickly. And Donald requested the 30-minute chart. So, really quick, we will look for those imbalance candles on the ES 30-minute chart. See the imbalance, and imbalance. Okay. If you start the zone right here, and the end of the zone would be right there. That is your imbalance area. I really like this right in here, but I'm going to leave that 630850 on there as well. Looking for the imbalance, I need to look over to the left because although this is an imbalance candle here on ES, to the left is why we created that imbalance candle right there. And it's all related to this move and this inside and up candle formation that gave us that nice bounce today from about this level. So, and this was a zone on my ES daily blueprint that worked really well. So that is your imbalance zone or your buy zone to the downside, and then your sell zones is up here. All right, guys, I unfortunately am out of time, but I hope that you found this content valuable. It is recorded and you can watch the replay if you would like. You can also check out on my YouTube, my personal YouTube page. I have a great video on there where I highlight how I use and draw zones based on the inside candlestick pattern. Check it out at Price Plan Profit here on YouTube. That's my personal YouTube page. And then find that video. I believe it's titled something like 80% of my trades include this candlestick pattern. Be sure and check out that video if you want to learn how I draw those zones that I use with these imbalance candles. Thanks for joining me today. Truly, truly appreciate each and every one of you. Again, if you're not already a part of the Simpler Trading community, I invite you to join us. We have 30-day trials for just $7. Whether you take that trial in the Mastering the Trade room or the Trendy Trading room, doesn't matter. I want you to come and check out just how great of a community we have here at Simpler Trading. Until next time, I hope you all have a great and profitable trading day. Bye bye.